Hey guys, Stock Saturday, and it's been a green week, but not quite as good as everyone else. I'm up about 4,000. Everyone sort of seems to be, based on Friday's gain, up a fair bit more, but I've had one do sort of particularly badly, so I'll come back to the portfolio. But a quick look at Silvergate Capital. So this was one that I sort of went for after Argo Blockchain dropped, and I thought they were going bust, and I thought Silvergate was sort of a reasonable play, potentially sort of coming back in the crypto bull market when it sort of, if it comes later on. And it seems they've been sort of hit a lot harder than they initially sort of let slip in the sort of FTX issues. It seems clients are leaving, and yeah, the shares dropped 57% on Friday. So that's not going particularly well. They've sort of come out and essentially said that they could be going bust. They've delayed the 10K annual report. But to be fair, Argo Blockchain said that they may have been going bust, and they didn't end up doing so. So there could be sort of something to come out. A lot of these are sort of write-downs, and they're not actually cash losses. But yeah, if the clients are leaving, then that's potentially sort of a more negative effect than the losses, really. Yeah, they've sort of had Galaxy Digital, Circle, Paxos, and Coinbase, and sort of leave them. So yeah, that's not gone particularly well. It wasn't a massive position after the sort of previous drops, but yeah, certainly not been good. And just to sort of see how badly I did time this, the sort of reports on Argo Blockchain, obviously looking back, it was premature and they weren't going bust because they ended up selling their mining facility. And so I sold it around 3 pence, and yeah, that was pretty much the bottom, and I sold it for Silvergate. Argo have since gone to sort of 14, 15p, so that's a 5x from where I sold, and Silvergate have dropped quite a bit. If you look at sort of scroll this to pretty much the exact point I sold, yeah, about 440%, maybe not exactly, but yeah, Silvergate down 68%. So that's possibly the worst timing I've done in a long while. Forgive you for unsubscribing if you do. But on the slightly more positive news, Volkswagen haven't actually released their report, their sort of annual report just yet, but they have released the results themselves. So they're just still putting together the report, and that'll come out in a week or so. But yeah, they've released the results, looking pretty good. Sort of similar to Stellantis, really. Deliveries down a little, but revenue up 12% year on year. And they're saying they've got a very high order bank backlog. So that's pretty good. Operating profit up 13%. Net liquidity improved to 43 billion euros after the Porsche IPO. So I'll sort of wait to see the proper breakdown in cash and debt and that sort of thing. So that's good. Delivery of battery electric vehicles up to 572,000, which is good. I was kind of hoping a little bit more, but yeah, there you go. It's about double what Stellantis have done. So considering the sort of market caps, I still kind of think Stellantis is maybe the better one to hold. It's sort of fast becoming my favourite, and Volkswagen sort of slipped to second. But yeah, I mean, the stock's risen about 10% this week, so everyone seems to like this. And the outlook, I would imagine, is what they like as well. 2023 deliveries expected to rise to 9.5 million, which is quite the rise. So maybe the semiconductor shortage has been sort of hitting more than we originally thought. They have sort of given us some numbers as well. So Deliveries down 8.8 million, 8.8, 8.8 million down to 8.2 million, and sort of sales slightly less down, and production actually up. So, guessing they've got a little bit of inventory still, sort of waiting for chips and possibly waiting for sales. Again, wait to see the full report. And yeah, employees up slightly, but revenue, as they said, revenue up, operating profit up. They're obviously spending a lot still on investment in facilities and upgrading the factories and that sort of thing, but you have to notice earnings after tax, net profit, 15.8 billion euros. So it's actually less than Stellantis. Whether Stellantis are sort of not investing quite as much, I presume so, because cash flow from operating activities slightly down from last year, but 29, just under 30 billion euros. So that is higher than Stellantis, but yeah, pretty good sort of highlight for Stellantis, I would say, considering sort of the debt that they have. If you take a enterprise value, including all the debt, they're about 3 times as much as Stellantis. So pretty positive, but pretty positive for Volkswagen as well. And they've announced a dividend of €8.70 or €8.76 for the preferred shares, which is what I hold. So that's €1.20 compared to last year. So I'll get that. Not sure what I'll get off Porsche. I don't think they've quite announced yet, because I hold Volkswagen and Porsche. Might need to, after the IPO sort of has been and gone, sort of reevaluate that on whether I sort of still want to. Maybe consolidate them into the one. But yeah, I'll have a look. We've had the full year results from Stag Industrial, fourth quarter, and all looking pretty good. One of my sort of US competitors to Tritax, basically. And yeah, looking nice. Core funds from operations of 55 cents, 7.8% up from last year. And for the year, they come just coming down to the sort of full year breakdown. So diluted funds from operations up 7.8% for the quarter and 7.3% for the year. So very nice little dividend from them, and growth as well. This sort of is the sort of thing that I'm probably looking to have quite a bit more money in long term after I sort of sell out of the crypto, to be honest. Sort of a 3, 4, 5% dividend, and sort of growth of that dividend up 7%, accounting for inflation and a little bit of growth on top. So quite like Stag. Had a look through the sort of acquisitions that they're buying. They sort of treat it as very much sort of commodity. They just measure it by square feet rather than sort of any sort of quality measures, I guess. But yeah, all looking very nice. Sort of reasonably long-term leases, not terribly long, but yeah, not too bad. And just looking through the news for the week, I didn't really see a huge amount that was sort of noticeable to make this sort of green week. It did have the US durable goods orders, sort of a reasonable surprise. This is January, so it's a little bit lagging, but yeah, the core durable goods orders was sort of expected to be flat, was a little bit negative last month, and that was 0.7% up. So this is sort of big companies spending money on manufacturing equipment and that sort of thing. So that to be sort of reasonably up, that's quite good. Pending home sales for January was a little bit strange, sort of flat last month, was 1% up, was expected to be 1% up again, and it was 8% up. So yeah, that was a bit of a strange miss, and maybe the housing market isn't as bad as they were thinking. Yeah, not a huge amount else. The house price, December house price index, that's not really too important. Load of other sort of nonsense there. And the UK, for the UK nationwide house price index, was pretty much as expectations, 0.5% down. Is now actually down on the yearly compared to the last month. We were still in the green slightly, but they're now 1.1% down on the year and another 0.5% down for the month. So still sort of cooling off, although it is still very, very high compared to sort of pre-COVID. So yeah, there's that. And then, yeah, you started getting the sort of ISM manufacturing PMIs and that sort of thing, sort of indicators of activity basically in the US. They're all more sort of US metrics, and they were sort of largely as expectations. Manufacturing prices up a little. They were expected to be sort of low. EU preliminary inflation was sort of fairly high, 0.8% on core CPI. So the interest rate rises haven't had the sort of hit that they would be expected. Year on year, inflation actually going up, not down. So that's not positive. Presume they're going to be sort of hitting interest rates a little bit harder. Unemployment went up ever so slightly, but still not sort of too high. And yeah, not sort of a huge amount else. I think the non-manufacturing, ISM non-manufacturing PMI is sort of an indicator of the economic activity in the US in general, and that was sort of slightly above expectations. I think they're saying above 50 generally is sort of positive, so it was expected to be positive anyway, and it was slightly more. But yeah, not still sort of unsure as to what caused the big run up on Friday. Haven't seen anything too significant, so yeah, let me know what you think. Yeah, just looking at the portfolio for the week. It's sort of not showing all my holdings here at the moment, just a bit of a Google bug, but yeah, anything sort of tech related pretty much was up for the week. You sort of Google's up 5%, and Broadcom quite a big winner, nearly 10% up for the week. So that's very, very green. It's not sort of showing here, but I'm actually 63% green on the position, on sort of £6,300 position now, and that's without dividends. So they have a hell of an increasing dividend. It's actually increased about over 20% in the last year, so that's pretty good. Glencore sort of coming back for the week, not too bad, 6.6%. Meta Platform's doing really well, 8.7%. And yeah, sort of just broadly sort of nearly everything up. Some sort of a little bit worse. Rio Tinto sort of 2%, 8% for the week. Shell up about 3%. Stellantis, 7% up. So pretty much everything in there is doing reasonably well. The ISA, not quite so much. The REIT's sort of having a bit of a hit, and obviously my 3x shorts not doing particularly well, but they are really sort of just a hedge. Sylvania Platinum sort of tailed back a little. That was sort of quite high last week, and I am sort of still considering selling the treasuries, sort of with rates expected to go up in the US. Not 100% sure whether to just sort of hold cash after all. Believe the sort of distribution or dividend, if you like, from this is sort of due in about a week and a half, so expect the holding is going to drop and then I'll get a payout. But yeah, it seems sort of maybe just a bit more unnecessary risk than holding cash, to be honest. And I haven't seen anything particularly to sort of jump into. Silver miners sort of looking promising, but they've sort of risen up over the last week, and I'm kind of tempted to get into one or two of the Bitcoin miners again. So obviously I've should have learned my lesson with that with Argo Blockchain, but I think they sort of look reasonably attractive. Haven't sort of priced in very much of the crypto move upwards in the last, since the new year. Or some of them haven't, at least. And yeah, I think some of them look reasonably attractive. So could potentially be doing that. Sort of 13k cash, essentially. Needs to be put to work at some point. And then on this little ISA, obviously Silvergate doing terribly. Hive Blockchain still sort of moving around. Atalaya Mining, though, doing reasonably well with the copper price. And Pan American has gone back above 10,000. So, yeah, one that I'm sort of looking at, either them or First Majestic Silver. So, we'll see. And, yeah, Chinese tech has sort of not really moved too much. So, a green week, largely the stocks in the invest account. So, yeah, let me know what you're green on, or if you think anything's looking a good buy. And like and subscribe. See you soon.